With mutual funds taxation, especially for debt funds changing, there is a sudden limelight on bonds. Bonds have suddenly turned attractive, both in terms of the yields that they give and also in terms of the taxation. So last video, we saw the 5 things that you need to keep in mind when you invest in bonds, if you're new to bonds. The next step is, of course, how do you invest in bonds? What sort of platform do you choose and what works best for you? Let's dive right in. Right. So when we talk about bond platforms, it's not like you need to buy bonds only through the exclusive bond platforms. There are also other bond platforms, such as the brokers that you have. You have a demat account, you have a broker account with large players, for example, like Zerodha. Any equity broker platform also offers bonds if they are listed in the stock exchanges, in the NSE or BSE, right? So that's an obvious choice. But the flip side is that you may not have access to many of the bonds because they are not traded. Unless they are, vibrant and traded, you may not have them. They may be listed but not traded. You may not have them, and that's where online bond platform providers or OBPP come into play. OBPP have recently come into the radar of SEBI. They are now governed by SEBI. They need a separate registered license to be OBPP. Right, so that makes them more recognized now by the regulation. So that's a second option. Your regular brokers. The second is OBPP, and then there are other bond platforms that offer unlisted bonds. Right, so these are bonds that are not listed or traded, and therefore they don't come under SEBI's purview. SEBI very clearly says that all players dealing with listed bonds have to be online bond platform providers or OBPPs. So every listed bond that one has to offer will come under OBPP or your regular broker. The other kinds of bonds, you might have heard of things like bill discounting, short-term business loans, things like that, very less formal, kind of lending that's happening comes through these other bond platforms. So these are the 3 options available right now for you. Let's get into the details. Just as in the interest of, providing a good infographic, I picked an infographic, a little dated one from Live Mint newspaper, and for you to know the difference, right? Like I said, for every bond platform, OBPP, you have to have SEBI's approval to do so, right? The other bond platforms that offer unlisted bonds don't come under the purview of SEBI. For you as an investor, what it means is that if you have any grievance, you can directly go to SEBI through their scores, mechanism if you have dealt with a online bond platform. But if not, all of these come under the Companies Act. In general, all bond issuances for any company will come under the Companies Act. So you have to resort to a different mechanism. There is, if something fails, there is a debt recovery tribunal, insolvency proceedings, and so on. So all those will kick in. Whereas here you have a direct, mechanism to address your grievance. The other thing, like I said, is all online listed bond platforms, if they are listed, they should be listed on the exchanges, NSE or BSE or both. And that does not mean you will have liquidity. They may or may not be traded on a regular basis, but you will certainly find that they are listed. The advantage of being listed is that once they are listed, they ought to be providing periodic information to the exchange about the bond. What happens typically is when a bond comes with a primary offer, there will be a lot of information. But if it's not listed, poster, there'll be absolutely no information on the bond. Whereas if it's listed, they have to do regular filings. Like a listed company stock would do regular filings with the, exchange. Bond players also have to do. So that at least lets you know whether this company that has issued the bond is doing well or not. I mean, it'll at least give you alerts if things are not going right. Right. The other thing is, big thing is taxation. If you deal with a listed bond, your short-term capital gains is as per your income tax slab. Your long-term capital gain is recognized just after 12 months and they are taxed at 10% without indexation, right? Whereas if it's an unlisted bond, the short-term treatment is the same. The long-term has to be held for 3 years to be qualified as long-term capital gain, and you do get 20% taxation without indexation, right? So clearly the listed bonds do have an edge. I already spoke of the default resolution process. There is a debenture trustee and so on. And if there is a grievance, even without a default mechanism, you can approach the SEBI's course. If it's an online bond platform, you can't directly do that if it is a unlisted platform. I mean, a platform that doesn't come under OBPP, right? And let's just try and understand how the differences between these online bond platforms and a typical debt broker, right? The debt brokers typically show you live quotes, the yields, the price of, at the yields at which the bond was last traded. So you get information on those, you get information on coupon, yield to maturity and so on. And once you punch an order, the broker routes these through the debt segment of the exchanges, your NSE or BSE. Both of these exchanges have a debt segment, right? So you make a decision, you punch the order, and depending on the liquidity, you may get the yield that is last traded. I mean, or it might vary, right? Where do you get this? This bond gets into your demat account, right? And what is the charge? It is like a brokerage charge, like you do for a stock. Every time you place an order on a bond, a buy or a sell order, there is a brokerage involved, right? Now, this is quite different with OBPP. In the case of OBPP too, it is like a marketplace. So you will have, it will source bonds from multiple places. It will buy them and keep them in its own balance sheet, or it may have tie-ups with other debt dealers and source it from them, right? You may or may not have enough information on the bond sometimes, but you in fact you will come to know about these bonds sometimes only when these OBPPs offer you. So because they're not traded on the exchange, they're bought off market and sourced to you, so on. So you place a request. It's called request for quotes because sometimes the yields may change because these are not regularly traded ones oftentimes. Then you will be allotted this into your demat account. How you will pay and all, we'll look at it later, but it will kind of be allotted into your demat account. That essentially means even if you go with an OBPP platform, you will need a demat account somewhere because the bond will be credited to your demat account, right? So we'll talk a little more about it later. But like I said, there are clear advantages of OBPP. One, because it's regulated by SEBI. Two, it has listed bonds, so you get more information about the bonds. Three, there is more transparency about the bonds because they have to be listed. There's a lot more transparency available to you, and typically not those only with reasonable. I mean, those not credit-worthy bonds. I mean, anything below A would become not credit-worthy for retail investors, right? They're still not defaulters, but not credit-worthy for retail investors. They won't come under, most of the time at least in the listed space. There may be rare occasions, but mostly. So, what to look for in an online bond platform? First, whether it has a SEBI license to be an OBPP. They should have disclosed it on their website somewhere in their part of the disclosure or just openly in their homepage and so on. There is KYC involved. So don't ask them why they have to do say. SEBI requires them to do KYC. And you can check whether they have a track record. You can check if there is online KYC available to be done easily, and whether the transaction is fully online or not, or whether you have to send a mail and then get, if that becomes cumbersome, and that's not really online. So check if the platform is fully online or not, whether they have a mix of safe bonds like AAA and AA plus bonds and maybe some high yield bonds, right? If a bond platform offers only the high risk ones, then you will have to again look for, if you are looking for safety, you have to go to one more bond platform, which doesn't make sense to you. So go for one place which offers a mix of both. And other important thing is, please read up whether the platform offers to sell your bonds on your behalf. Because many a time, most of these bonds are illiquid, although it can be technically sold in the market from your demat account through your brokerage. If there's no liquidity, you'll not be able to sell. Then the only way is to ask these people whether they'll be able to sell it for you. So not all bond platforms have both a buy and sell mechanism. Many of them allow you to buy but not allow you to sell. right? So check that, before you kind of choose your bond platform, because you can't be having 3 4 bond platforms. It becomes too cumbersome for you. Now coming to why we said we prefer an online bond platform as opposed to the unlisted ones, etc. We already spoke about this. There is a registration, there is a redressal mechanism through scores, there is proper KYC being done, only listed bonds will be available, and there is a proper request that your order goes through. So there is transparency in execution of your orders. But please remember, there is a margin. So how do OBPPs make their money? OBPPs make their money in a kind of a margin that they add to the yield, because they don't charge you a separate brokerage or commission. Please remember, that's the primary difference between buying through a brokerage and OBPP. They don't directly charge you, but their margin is built into the yield that they offer you, right? But at least there will be more transparency. At the time of your buying, you make a request, you know exactly what is the yield that you're going to get in it. And then there is proper execution of orders. The settlements are made through the exchange mechanism called ICCL or NSCCL. All of these are recognized settlement. You don't have to wonder where your money is going. Your money actually goes there, and then your bonds are credited to your demat, right? And OBPPs cannot offer you other kinds of bonds. They need to offer you only listed securities. So between all listed safe securities, they can't try to sneak in some high risk, unlisted bonds out there. So at least you'll be, on safe ground, especially if you don't have much knowledge about OBPPs. Now I'm just giving you a few names. There are plenty of them out there. Golden Pie, for example, mixes a mix of high quality bonds and high risk bonds. India Bonds too does that. Win12, Grip Invest. These are the names here. And then I'm giving you a few names just for your awareness, that are offering bonds that are not listed, which means they don't directly come under SEBI purview. Giraffe is one, Credex is one. You would have seen bill discounting, high yields and all that. Even Golden Pie has something called Plus. It is their listed, bond offering and deposit offering platform. All of these are available. It is up to you to go check and choose which bond platform works for you. Please, a disclaimer here, you're not tied with any of them. Even when we cover bonds through Prime Bonds, we choose the one that is good in terms of its risk adjusted return, and it is up to you to choose the platform to invest in. We don't have any kind of commercial agreements with any of them, right? Like I said, look for one with mix. One, ease of transacting, that is, it should be fully online. Second, some track record. And 3, see if it has a mix of high rated bonds and some high yield bonds if you're looking for that. Please remember, in all this, some bond values may be low as 10,000, but in many of the cases, the minimum amount of investment is 1 lakh and above, because these are not bonds just traded frequently in the market. These are probably private placements made and then listed, and then they are coming into the secondary market now. So the value will be high. So many of these bonds out there are meant for people with deep pockets. So be very clear about it. Maybe the other bonds, the OBPP, non-OBPP bond platforms, you will have as low as 10,000, but they are rich with risks. So please be aware of it. We are not recommending any of the platforms at this point which are not OBPPs. OBPPs or your own brokers, if your broker has a range of products, like I said, many of them, because they're not traded, the broker may not be able to offer you. So these are the primary points. Go check out some of these. Do read our articles on PrimeInvestor about this. Do see our earlier video. The link is given below on what are the factors you need to look at before choosing a bond. And do subscribe to our channel for more such videos.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.